Okay, so if you've been watching the Indian stock market lately, you know it's been navigating some seriously choppy waters. In this explainer, we're going to break it all down. We'll look at the key pressures pushing things around, see how the market's actually reacting, and, most importantly, talk about what it could mean for you. Let's dive right in.
All right, before we get started, just a quick but really important heads up. This is all for informational and educational purposes. It is not financial advice. For any real investment decisions, you've got to consult a professional who's registered with CBE.
So the first thing you absolutely need to see is this massive number. Brent crude oil has jumped almost 8%. Now, for an oil importing country like India, a shock like this is a huge headwind. It puts immediate macro pressure on pretty much everything, from inflation all the way to our currency.
And you can see that pressure reflected right here in the India VIX. People call this the market's fear gauge for a reason. You know, a reading over 25 is high. It signals a ton of uncertainty and a much bigger chance of sharp, unpredictable price swings. This also means a higher risk of what we call overnight gaps, where the market opens way higher or lower than where it closed. Long story short, the market is definitely on edge.
So here's our game plan. First, we'll talk about why the market's on edge. Then we'll check the Nifty's vital signs. After that, we'll see which sectors are winning and which are losing. And then we'll get practical with two different playbooks, one for short-term traders and one for long-term investors.
All right, let's kick things off with part one, a market on edge. We're going to take a look at the macro storm that's brewing right now.
You see, it's not just one thing causing all this anxiety. It's really a perfect storm of factors. You've got geopolitical tensions in West Asia that are directly fueling those high oil prices. Then, everyone's waiting for key inflation data out of the US. Plus, we have a huge RBI monetary policy meeting coming up. And on top of it all, foreign institutional investors, or FIIs, just keep on selling. It's a classic event-driven market. And this quote from NDTV Profit, well, it just hits the nail on the head. It shows you the domino effect perfectly. So oil prices surge, and that immediately raises inflation concerns. And that, in turn, basically ties the hands of the Reserve Bank of India, making it way less likely they'll be cutting interest rates anytime soon. Okay, let's move on. For our second part, we're going to look at the Nifty's vital signs. You can think of this as the market's own personal fever chart.
So, we keep throwing this word volatility around, right? But what does that actually look like in the numbers? How is the Nifty index itself behaving, day to day?
Well, it looks like this, a nearly 600-point swing from the day's low to its high. That is a massive range. It's a crystal clear sign of the market's anxiety and the kind of whipsaw action you see when buyers and sellers are just battling for control and nobody has a clear upper hand. And you can see that internal tug-of-war perfectly right here. The advance/decline ratio is just under 1. What that means is for almost every single stock that went up, another one went down. This is not a market that's moving with any kind of conviction. It is totally, completely divided.
So let's just put it all together for a second. The Nifty closed almost flat, right? But that headline number hides the huge battle that happened during the day. The VIX is high and it's rising, and the market breadth is perfectly split down the middle. The big takeaway here is that this is the picture of a market that is tense, uncertain, and really lacking any clear direction. Which brings us perfectly to part 3, sectors in the spotlight. Because even when the overall market looks directionless, there's this fascinating tug-of-war happening right under the surface, with some very clear winners and losers. And here is that divergence in plain sight. On one side, you've got sectors like IT and realty showing some real leadership. But then, on the other side, you have these traditionally safe or defensive sectors, like consumer durables and pharma, that are actually lagging behind. Now, this tells us something really interesting. Despite all the uncertainty, money is still flowing towards growth. It's not just hiding in safety just yet.
So the big question is, how do you even navigate this kind of market? Let's get practical. In part 4, we're going to build a trader's playbook, focusing specifically on strategies for this exact kind of short-term volatility. For traders, the keyword right now is caution. Seriously, when the VIX is this high, the playbook completely changes. It means using smaller position sizes to manage your risk. It means you got to wait for a clearer confirmation before jumping into a trade. And you have to avoid that temptation to chase moves, especially late in the day. Oh, and this is crucial. This is absolutely not the kind of environment where you want to be averaging down into a losing position that's moving fast against you. But what if you're not a short-term trader? Let's totally switch gears for part 5 and talk about an investor's strategy. This is all about taking a long-term view right through all of this daily noise.
For the long-term investor, the principles are really different. The most important thing is to separate the geopolitical headlines from the actual underlying fundamentals of the companies you own. Instead of trying to time the bottom, think about accumulating your positions in stages or staggering them. Focus your buying on those sectors we saw earlier that are showing relative strength. And finally, always keep an eye on that macro risk trifecta: the price of crude oil, the rupee's exchange rate, and the direction of those foreign investor flows.
So as we look ahead, these are the key risks you'll want to keep on your dashboard. That high VIX, the price of crude, the continued FII selling, which, by the way, was nearly 20,000 crore rupees in just the first 2 trading sessions of April. That is a huge number. Plus any overnight headlines and, of course, U.S. economic data. These are the triggers that are going to drive the market's next big move.
And it really leaves us with one final question for you to think about. In a market that's being pulled in so many different directions by global events, just take a moment to look at your own portfolio. Is your strategy built for offense, or is it built for defense? Thank you so much for watching, and please remember to consult a CB-registered advisor for any investment decisions, as all the data we've discussed today comes from public sources and is, of course, subject to change.